What's good, everybody? Welcome to the channel and welcome to my first video of 2025. I know I'm late. I've been away for a little bit. I apologize for that, but I will be more consistent this year in putting out content that I think you'll find useful in the terms of financial literacy and just kind of finance in general. There's a couple things that's going to change about the channel that's going to allow me to do that. The first thing is the videos will have a bit of a more abstract look. There'll probably be less editing because it just gives me the time to be able to put out content more consistently. So the information will not suffer at all, but there won't be as much editing done as I've done in some of the past videos, but it will be there where needed. The second part is I want to add a wrinkle to it. This will always be a finance channel as far as I can tell for the foreseeable future. I have no plans to change it, but I do want to add an element of, just logical information, perspective, just life experience. So I do want to add some different wrinkles to it, but it will primarily be a finance channel, but it will go deeper than just credit, banks, and credit unions, although this video is about credit. So in this video, let's go and move forward with it. In this video, I'm going to talk about the easiest way for you to figure out what your credit score should actually be. So credit scores range between 300 and 850. That's your FICO range. The 300 is what everyone gets to start with. It's the lowest score you can have. So everybody gets the 300 points just by getting out of bed. The thing is, how do you get the other 550 points to achieve an 850 score? Well, I'm getting ready to tell you. The first thing we're going to talk about is your payment history. This is 35%. You can get 35% of those 550 points, which is 192.5. 192.5. We're going to round up and just going to call it 193 points just by paying your bills on time. That's the easiest part. The next one is 30%, which is your credit utilization or usage of credit. Okay, this is worth 165 points. So 30%, 165 out of 550. This is, how much of your credit you're using. Now, I just want to throw a caveat in. If you're not participating by having any credit cards and all you have is, say, an auto loan or a home loan, they don't use that as credit utilization. So if you don't have any credit cards, you're not participating in that 30% for credit utilization, and you're missing out on those 165 points. You're just leaving them on the table. The next part is length of credit history. This is when all of your credit accounts are added together, your revolving accounts, and they determine what the average length is that you've had these accounts. For that, you can get 15% of your score, which is, I want to say, 82.5 points. We're going to round it up to 83 points. So that's up to 83 points. The last two categories, 10% is the mix of credit. So that's installment and revolving credit accounts. Of course, installment would be like an auto loan or a personal installment loan. Revolving is a credit card. If you have a mix of those two in your credit trade lines, that's worth up to 10% of your score or an additional 55 points. Last is pursuit of new credit or credit inquiries. And this is just how often that you have had your credit pulled in an effort to obtain new credit. That's worth up to 10%, also 55 points. So there it is. If you add all those together, that's 550 points. You add it with the 300 points that you're given just for getting out of bed, and that is how you can go from 0 to 850. So thought I put it pretty simply there. So it kind of gives you an idea. I mean, for instance, just by missing one payment on a credit card, your score could tank like 50 to 100 points just by missing one payment. So that's, without a doubt, the most important part of this, but take that information and do with it as you will to try and figure out why your credit where it is, and to figure out what you can do to make it better, because now you know how the points are compiled. So hey, again, looking forward to seeing you a lot more often in 2025. Thanks for watching this video, and I will see you soon.